Did everyone just flip bearish on Bitcoin? The price once again tumbling to $56,000. September playing out exactly as people predicted. But what does the future look like? Why am I remaining bullish? And I've got a very interesting chart you guys definitely need to see. We're going to talk all about why the market's doing what it's doing and fundamentally what is coming in the next weeks and months. So if you like that sort of thing, you want to stay tuned, hit that like button. Also, don't forget to turn your notification bell on so you're updated with our latest content and live streams. With that being said, let's get into this one. So for many of you, you will have seen this diagram, everybody calling the fact that September is going to be a month to remember, actually a decline in the price, roughly speaking, an average of around 4.5%. The bad news, we've already surpassed that so far in September, but history may not be the same as it always has been. We've got to look to an optimistic view of September rather than what always happens. Remember, when everyone expects the market to do one thing, sometimes it does the complete opposite. Obviously, October looking significantly more bullish in the longer term. And actually, we then run into a 3-month period where lots of people predict a significant uptrend. Then you're looking into 2025. And actually, it continues for nearly 7 months of on average gains for the cryptocurrency market. But this is worthwhile thinking about it. So why is everyone freaking out right now? Why is the market suddenly corrected? Why have we seen a massive push down to 56,000? It is simply this. This simple chart right now is where people are having a concern. This is actually the yield curve, and you may have heard this spoken on a number of channels, financial channels, everyone else in the crypto space. It's what people are looking at right now. So what's happened? Well, ultimately, the yield curve, the measure of the bond rate, short-term versus long-term, has uninverted. Generally, we've seen since 22 an inverted yield rate, short-term slightly or outperforming longer-term holdings. It makes no sense really, but it has uninverted. History going back to 1960 tells us that actually when we see an uninversion on the yield curve, recession does follow between 12 and 14 months after that. It's not all bad news though, because markets tend to rally as they move into a recession. Now, this is why people are concerned. This is why we've seen assets plummet as well as the S&P 500 as people predict a recession is on the verge, particularly in the US. Now, this also does pose a problem for the Fed, given the fact that most other countries, Canada, once again, their third rate cut so far, are already cutting rates. They're already trying to beat recession. The US is behind the curve. Look out, 18th of September is going to be wild. They need to go 50. I don't think Jerome can, given a concern in the market right now. So definitely worthwhile thinking about it. But Mr. Crypto here, giving us a view on where the market is and how things somehow can correlate quite the same. This is last year's position. You can see here on the left-hand side where we rallied all the way from 24,800, the bottom, all the way and continued to move into where we are now. And isn't it funny how things seem to be playing out pretty much exactly the same? Now, that's not to say that all of a sudden we're going to see this massive spike, but it is interesting how things, even the corrections, are simply following the same rule. I talked a little bit about this in the video previously where they talked about institutions, cryptocurrency exchanges going whale hunters, trying to get liquidity and positions out of the market. And I think what the point here is we are absolutely near the bottom of the market. And if you believe the bull run's over, then fair enough, sell, get out. Lots of people are sat on the sidelines waiting to buy, and I'm going to show you that in just a minute. But very interesting to think about how this sits. One worth noting though is obviously iShares, the biggest holder outside of Grayscale, holding those ETFs. Well, guess what? They are simply not buying or selling. We actually looked at this live on my live stream. History tells us when we look at this, a lot of the time where we see BlackRock just sitting, waiting, is where we see market corrections. They tend to come in at the bottom. One of the things I'm looking at is when I see inflows once again into iShares Bitcoin Trust. They're not selling, they've not got outflows, they're simply just not doing anything. And I think this is where the bottom comes in and we look for that opportunity. And I think it's coming sooner rather than later. Definitely September 18th is a date we all need to be aware of. Now, lots of people predict a significant uptrend. Why? Well, look at this. $3 billion put into USDT stablecoin in the last 30 days. What does that tell us? People are waiting for the bottom, absolutely waiting for the bottom. $3 billion. We broke down below a $2 trillion market cap for the entire crypto space, but people are waiting to grab the opportunity. Liquidity is increasing in the market, whether you can see it or not. We know global liquidity is increasing as well. It's all a big catalyst for what we think may be the next 7 months of positive uptrends if you look at history, and particularly where you look at what happens in those months. So this could be a very important part. This could be people absolutely getting ready as history seems to have a good way of playing out the same. So when we take a look at the price action, no surprise, Bitcoin following in this descending trend or this descending channel. What is a concern to a degree here on the daily is some of the moving averages starting to move into a bearish sentiment, as well as the RSI divergence also pushing down. Now, we did break down below this line here. That was the 4.5% decline for September. Obviously, we still have a significant amount of this month to go, as well as Fed rate cuts, Russia, China, and many other catalysts that could be coming to the market. But I guess the question is right now, are you concerned about where we are? Do you believe there is more to come, or do you think we've seen the best of the market? Let me know in the comments down below. My view, and I've said this openly on a number of videos right now, I still think the best of the market is yet to come. I actually think this is a play by many of the big people in the space to wipe out some more liquidity, to shake out the people that are in retail, because we know that they're not here yet. We know that positions are waiting to be taken up, and I simply think this is the last push down before we move. Bear in mind, it wasn't only the 5th of August, we actually wicked down to below 50,000 and then rallied back to 65,300. What does that tell us? Well, I'm looking at this price range. 54K could be the bottom of this descending channel. As we move into the September 18th rate cut, we may even see a further correction before, in my opinion, the market truly ignites. And that may even be October. Remember, like we said, back here, October, November, December, January, February, March, April, and May all tend to be positive if you go by what history tells us. It could be interesting. Let me know what you think in the comments down below. But as always, thank you so much for watching the video. Don't forget to hit that like and subscribe button if you enjoyed the content. It really does help out the channel massively. We are growing on our way to 30K, so I appreciate every single one of your help getting there. And as always, thanks very much for watching. I'll see you soon. Bye-bye.